This video is for educational purposes only and is meant to provide participants of the San Francisco Electrical Workers Retirement Savings Plan an understanding of their defined contribution plan. This PowerPoint presentation is intended for educational purposes only and does not replace independent professional judgment. Statements of fact and the opinions expressed are those of the presenter individually and, unless expressly stated to the contrary, is not the opinion of the position of the Board of Trustees of the San Francisco Electrical Workers Retirement Savings Plan, its sponsoring employers, or its professional advisors. The Board of Trustees for the San Francisco Electrical Workers Retirement Savings Plan does not endorse or approve and assumes no responsibility for the content, accuracy, and completeness of the information presented. General plan information. The San Francisco Electrical Workers Retirement Savings Plan is a multi-employer, collectively bargained, defined contribution retirement plan that provides for contributions to participant accounts. A participant is an individual who has an account to which contributions have been made. The plan contains a formula for determining participant and employer contributions. As a participant, you will be entitled to the balance contained in your account, generally at retirement, but also before retirement for certain specified reasons. The plan was last restated effective as of January 1, 2008. Previous plan documents and amendments govern retirement, eligibility, and other issues relating to your benefits before 2008. Before 2007, the plan was a money purchase pension plan. The plan was converted to a profit-sharing plan on January 1, 2007 to allow for participant 401k contributions. The more participant contributions you make to the plan, and the higher your investment return over the years, the greater your account will be when you need to withdraw amounts to help with your retirement. The plan is funded by employer contributions required to be made to the plan by a collective bargaining agreement or subscription agreement, and also by participant elective contributions. Plan assets are held in a trust established under the plan to hold plan assets in the trust and are divided among all participants in individual accounts. Each account receives its own contribution, bears its own earnings and losses based upon the performance of investment funds that may be selected by the participant, and bears an allocation of administrative expenses incurred to operate the plan. A participant's benefits are in the form of distributions from the participant's account. The current collective bargaining agreement between Local 6 of the International Brotherhood of Electrical Workers and the San Francisco Electrical Contractors Association and individual employers, if applicable, referred to as the collective bargaining agreement in the summary plan description, requires employers to contribute to the plan's trust at fixed rates per hour for each hour worked by their covered employees, and allows participants to elect additional contributions. Under the collective bargaining agreement or subscription agreement, employers make a mandatory employer contribution to your account. Contribution rates for each hour of your employment are set from time to time by the bargaining parties. Employer contribution rates for apprentices are also set forth in the collective bargaining agreement and are based on the apprenticeship level of the employee. Employer contributions are not subject to Social Security or Medicare taxes, income tax withholding, or other payroll taxes. As of June 1, 2019, employer contribution rates under the plan are as follows: journeyman and above, $5.50 an hour, and then on a percentage basis down through 45%. Apprentices at the 40% level are not eligible. In addition to employer contributions listed on the previous slide, participants are allowed to make employee contributions, sometimes referred to as elective deferral or 401k contributions, to their account. Each participant may select a deferral classification as of July 1 and January 1 of each year, which determines the amount of the participant's hourly wage that is paid into the participant's account instead of paid in cash. Each year, in late May or late November, or possibly early June or December, participants will be asked to complete a form on which the desired hourly deferral amount may be elected. That form must generally be returned to the plan office on a specified date. A participant may elect any whole dollar hourly deferral amount from $0 to $8. Although employee contributions reduce a participant's wages for income tax purposes, they are still subject to Social Security and Medicare taxes. Excess deferrals. The annual limit on employee contributions is $19,500 for the year 2020 and applies to all 401k and other elective deferral plans in which you may participate. Any excess deferrals referred to you must be included in your gross taxable income for the year to which the excess deferrals relate. Self-direct your investment. The plan gives you the option to self-direct the investment of all or a portion of the assets credited to your account. Investment options include a wide range of funds that vary from conservative capital preservation to more aggressive growth investment approaches, allowing you to design an investment strategy that best suits your goals, time horizon, and risk tolerance. Your share of the fund's earnings or losses will be credited to you or deducted from your account at the end of each business day. A complete description of the plan's investment options and their recent performance are available online at Fidelity Net Benefits at fidelity.com/@work. You may obtain a hard copy by calling 1-866-84-UNION. You may also request a hard copy of this information by contacting the plan office. Please note that a fund's past performance is not necessarily an indication of how the fund will perform in the future, and any fund you select may lose money. Default fund. If you do not provide express direction instructing the plan how your account should be invested, your account will be invested by default in the trustee-directed account, which is an investment fund managed by the board. The trustee-directed fund reflects a single investment risk profile that the board has determined is appropriate for an average participant. Because your investment objectives may not be consistent with that of the average plan participant, you may want to consider self-directing your account to one or more other fund options. Therefore, we encourage you to select your own investment funds for your account so that your need for investment return and tolerance for risk are accounted for appropriately. Fidelity will provide quarterly statements showing detailed employer and employee contribution information and the value of your account as of the end of each quarter. You may also access your account online by logging on to Fidelity Net Benefits at www.fidelity.com/@work. You must set up a personal identification number, a PIN number, either online or by contacting Fidelity at 1-866-84-UNION in order to access your account. You are responsible for reviewing your account information carefully and notifying the plan office promptly if you notice, or reasonably should notice, any errors in your statement, including any failure of the plan to have implemented an employee contribution election you may have made. As previously noted, you may access your account online by logging into Fidelity Net Benefits at fidelity.com/@work. Fidelity Net Benefits website has a registration screen where you enter your first and last name, your birth date, and the last 4 digits of your Social Security number. Once you are registered with Fidelity, you will have access to a full suite of educational tools and information, both on your account, your investment selections, a library of learning material, planning and guidance, your profile, and any other tools or life events that may be important to you and your retirement planning decisions. I hope this video was helpful for you to learn more about your retirement savings plan.